Good morning all, and a very warm welcome to the first ever online Trading Asia conference. It has been incredible to see the interest and engagement this event has had so far, and it really goes to show how important these events are and what role they play in business development. The new normal brought on to us by COVID has changed the nature of networking and knowledge sharing with peers and thought leaders, and has rather forced us to reimagine the way we do business until the day comes when we will once again meet at the Renaissance Harborview Hotel in Hong Kong, or perhaps the Marina Mandarin in Singapore. So until then, thank you all for being with us here today and for your support. This would of course not have been possible without our amazing sponsors, HKEX, B3, Cassini Systems, CME Group, BSO, EEX Group, eSunny International, Japan Exchange Group, TMX, the Technatural Company, and our supporting organizations, Shanghai Futures Exchange and Absolute Return Investment Management Association of China. Make sure you stop by their booths in between sessions, have a chat, and pick up some of their virtual goods. I'd also like to take this time to thank all of our speakers, as you will probably be seeing a lot of them over the next 2 days. They represent every layer of the financial stack and are considered thought leaders in each of their fields. You can also go to the networking lounge and chat to other delegates and take part in polls and much, much more. Do explore the whole platform. If you have not already done so, check out the agenda and click on the session you are interested in attending, and a notification will be sent when it's time to start. If you have any questions throughout the conference, even outside of official office hours, please go to the help desk, which can be found in the lobby, and a member of the FOW team will be there to help. Once again, thank you all for coming along, and I hope you enjoy yourselves. Now it's time to kick things off with a fireside chat with Charles Lee, Chief Executive of HKEX, and Mr. Chris Wright, Asia Editor at Euromoney.
My name is Chris Wright. I'm the Asia Editor of Euromoney, and I'm delighted to be joined this morning by Charles Lee, who has served as Chief Executive of Hong Kong Exchanges and Clearing, or HKEX, since 2010. Charles has orchestrated some of the most significant strategic initiatives in HKEX's history, including the expansion into fixed income, currency, and commodities through the acquisition of London Metal Exchange in 2012, and the launch of OTC Clear in 2013, as well as enhanced mutual market access with mainland China through Shanghai and Shenzhen Stock Connect programs. Prior to joining HKEX, he was the chairman of JP Morgan China. Welcome, Charles.
Great, Chris. So happy to join you.
Oh, wonderful to see you today. But we speak, of course, at the time of an unprecedented global pandemic, and it would be strange to start our discussion, I think, with anything else. Now, you run one of the world's largest and most international exchanges. You have a bird's eye view of investor sentiment and market behavior. What have been the major impacts of the pandemic from your point of view?
This pandemic really, in many ways, surprised many people here running the market, because a pandemic of this scale, you would have thought, is completely shut down global economy, shut down global travel. We are all trapped, and we are all working from home. You would have thought something like that is going to, is going to bring a devastating impact on the market. And it did, at the very beginning, seems to have a lot of impact, and the people think we should be only seeing the beginning of it. But, it's so hard to know that now that 6-7 months later, markets are smashing records left and right. And but if you obviously dive deeper in the market, you would see that it's really a tale of two cities. Many of the traditional industries, particularly the industry having to do with travel, entertainment, and anything that requires a lot of activities and a lot of physical, interactions between people, those industries obviously have suffered tremendously. But if you look at the broader market now increasingly represented by very big tech companies that are doing tremendously well in this new environment, because we are now becoming so much more reliant on technology. All this working from home just means that just so much of our lives are now being connected through technology. And so as a result, the big tech indexes, which is now increasingly representative of the market, are doing so well. And then that has also brought about a lot of other industries with it. But fundamentally, in the end, I think we just had too much money as well. When the government, looking at the devastating impact on the real economy, is just pumping money into the market, into the economy, particularly the Fed, and that is on a scale that we have never seen before. So with that kind of a money and liquidity in the marketplace, there's just a very little place for the money to go, and so they very quickly become part of the market, driving this thing even into records after records. So I find it's a very strange experience running the market in Asia, together with a lot of my friends and colleagues around the globe, is that this is supposed to be the most stressful year. In many ways they are, but not stressful in terms of market levels, in terms of volume, in terms of liquidity, in terms of volatility, and in terms of the broader gains a lot of the investors who happen to be in the market.
Yes, it's been fascinating to see, as you say, market performance all around the world. I think has surprised many people. But looking sort of beneath the hood a little, if we look at liquidity in markets, if we look at people's approach to risk management, are there any interesting trends we're seeing at that level because of the pandemic?
Again, very strange experience, because a lot of the real smart money lost a lot of money, because real smart money, go to a lot of the histories, go to a lot of the past experiences and busts, and looking at this in a very disciplined manner. But they probably have failed to see is really the kind of money that can pump into the market that would destroy almost any risk models that people are playing with. And also the technology companies, again, are becoming so important leaders of all the indices. And as a result, I think risk management in its traditional sense seems to be out of the window. And because the market seems to be defying gravity. But we still have many smart minds and smart thinkers continue to be cautioning that this is the worst may not be over yet. But obviously with the pandemics, still hitting hard, but with the vaccine coming around the corner, hopefully, touch wood, maybe by next year we will see ourselves on the other side, on this. But looking at the fundamentals, looking at the real economy, whether it's in the US or in Asia, in China, in Europe, I still see tremendous amount of struggles, but it's just not really presenting themselves in the market.
Yes, it's interesting. Now you raised the point of technology and the fact that many of the best performers in market terms have been on the technology side. And one thing I've heard consistently through this crisis is that the pandemic has driven greater digital transformation. It's driven greater digital adoption, whether that's in the banking sector, markets, wherever it is. So I'm not thinking now of the stock performance of Facebook and so forth, but the methods through which people trade and engage. Has the pandemic had an effect, perhaps a positive effect in that way, the comfort and use of technology?
I think in terms of the actual technology deployed in the marketplace itself, I don't really think the pandemic actually has brought about any new technologies or new adoptions of technologies. The market have been broadly very, very electronically driven for a long time already, and the market has generally been very strong, and a huge investment has been put into the market in technology over many years. And those technologies, by and large, are still traditional technologies. They're not necessarily blockchain or internet-based. Obviously, a lot of trading are internet-based, but that's almost already looked like a telephone line. So it's not really technology per se. So the market itself, the pandemic has not really changed fundamentally. We pretty much still relying and using and leveraging the same technology, and for the last 10 years, because there has been huge progress made in the last 10 years. But I think it is really in terms of the technology that individuals, all of us individually use, because we're no longer physically able to be in the office. It's really working from home. And whether you have access to, to your system, without disruption, whether you're able to send a lot of sophisticated data through the internet without, compromise. So it is that part of the technology that obviously, have been much more widely used and much more widely adopted. But a lot of the technology players, I think their advancement or their strong performances have less to do with really the market or how Wall Street and people work from home. It's really fundamental daily lives, because most people are now living home. So everything you eat, everything you live on are now largely being delivered and largely being purchased and ordered and delivered and sent and ultimately consumed, not through physical shopping or physical, many of the traditional way of interaction. So I think it is in those real economy on that scale that has brought so much, revenues and so much economic benefit to the big players, who essentially now, you never have, we always have had very powerful companies that are extraordinarily important in our economies, but we have never ever had a period of time where just so fewer companies seems to be having an impact on almost every aspect of your life.
Yes.
I don't think we have ever seen anything like that on a global scale. And that's really one of the reasons why those companies, revenues and those companies' share prices and market cap have increased that much, despite the challenges. In fact, they, in many ways, is the revolution that seems to be the evolution that has been going on for many years, coming into a revolutionary sort of a level of manifestation.
Yes. Now, the pandemic is one part of the global backdrop. Another, it's fair to say, is geopolitical tension between the US and China. Now, Hong Kong has always been a place where East and West meet, and it's done exceptionally well in balancing the needs and the communication of both economies. It's got to be tricky when they disagree. How does Hong Kong and how does HKEX, I should say, tread the right path through a fairly delicate environment?
Yeah, I think this is really a tricky period, and we're gonna see challenges in the years to come. In some ways, it reflect potentially a fundamental change of role or change of circumstances that are defining our role. What I meant, by that is that in the past 4 decades, let's say, when China is rising and developing, lifting people out of poverty, creating huge, opportunities not only for its own people, but also becoming the manufacturing of the world, the factory of the world, and is increasingly become such a big contributor and leader of global growth. So there is a very broad-based embrace of China's growth and China's rise, by America, by Europe, and by almost everybody around the globe. It is in that 40 decades where there is tremendous amount of interactions between China and the US, and there's tremendous amount of willingness for them to want to interact and help. And Hong Kong's role was a very positive role. Hong Kong's role was a role to facilitate that interaction, is to help them close, trying to help each other, and facilitating that increasingly closer and closer collaboration. It is in that role, and that everybody find that Hong Kong can help them getting even closer to the other party, whether from China's perspective, and whether from the US perspective or from European perspective. So everybody look at Hong Kong in that positive, perspective, in that positive energy. I think we are now entering into an era where that role will be defined more by negative circumstances, but nonetheless actually potentially still very important, if not more important. What I meant by that is that now today, the conflict, the decoupling, people seems to be really want to walk away from each other, despite the massive, connectivities that is already there. It is almost impossible for people to think that how can you possibly decouple when you are already so deeply coupled. So with that sort of a conflict, and with the seemingly determinative, efforts by the Americans in particular to say that enough is enough, we're out of here. And with that sort of if it's really going to happen, people will quickly realize how difficult it is to truly decouple when everybody is so deeply intertwined. So in that perspective, people will find, while they may politically wants to move further apart, there is going to be practical reasons why they can't. And they have to find ways to deal with each other. They have to really redefine the relationship, and maybe politically unacceptable for them to do directly, maybe now becoming even more politically, the only choice is to go somehow through Hong Kong. So Hong Kong will have to find its own ways to adjust to this change, that the two major centers of gravity of the world are now trying to move apart. Although moving apart is going to hurt everybody so much so. So while they were talking about moving apart and actually moving apart in many areas, Hong Kong will become that critical linkage that allow people to do whatever to say whatever they wanted, to do whatever they wanted politically, but practically there is a connectivity, there is a critical link that allow people to still be able to really keep the two worlds fundamentally still connected, but probably finding their own ways to achieve their own political satisfaction, that somehow they want to rearrange the world in a different order.
It's interesting.
Well, I personally don't really think Hong Kong, but obviously Hong Kong get caught up in this whole beginning of this process, simply by all the circumstances of 2019, and then the subsequent, legislative event development on national security law. And that obviously is just putting Hong Kong into the spotlight in the most difficult and challenging environment. But I'm sure we're going to get out of this and get over this, and then move on and continue to play that critical role of translator and conformer and transformer, because people can't afford to truly divorce. This divorce is never going to really happen like a real divorce. This is going to be, I'm not talking to you, but there are going to be a lot of things that still need to be done. And Hong Kong will be quietly playing those roles.
Yes, well, it appears that it is playing those roles rather well from the capital market side, despite all of the challenges that you've just described geopolitically, domestically, and the pandemic. I mean, your first half numbers were exceptional. You had record revenues, very high cash market turnover. Related to China, you had record stock connect volumes. You've got big IPOs coming. I think you were the second best exchange in the world globally in terms of IPO funds raised in the first half. I mean, the natural question is how, given the background?
Well, I think this is, we are now seeing, reaping the fruit of many years of hard work and labor. I think over the last 5-10 years, we really, there are two very big consistent themes that define our strategy. One is to connect liquidity with China, meaning connecting the world with China in terms of liquidity. And two, transform our equity underlying. So that, I tend to say that the first is more about connecting the water, and the second is about changing the fish. I think connecting the water, essentially, there is this particular healthy and feisty and fish, in the Yangtze River. When the Yangtze River hit the ocean, is this freshwater meet the salt water. That this particular kind of fighting fish called a shiyu. It's very, very good, very tasty. I love it. It's almost like a salmon into Alaska and Canada, because they were in the ocean, but sometimes they wanted to swim upstream into the freshwater. So when the Chinese liquidity and the international liquidity meet, massive chemical reactions will ensue. So our big idea is to find a way to connect this two big pool of liquidity, which, because of China's capital control and philosophy and policy, and unlikely to change for a while, maybe for a long while, we have finally found the way through this net settlement and closed loop, so that we are able to have a massive interaction, massive integration of liquidity, but without necessarily breaking down the capital control that China continue to insist that they need to be there. But we are able to really find a way to do that. So that started, 5-6 years ago with Shanghai Hong Kong Connect, and then later on Shenzhen Connect, and then Bank Connect. Those took a number of years for that to season and to mature. And finally, we're entering into the explosive growth period where you start to really see the magic and that liquidity mix is going to bring to a market. So that's why that is underpinning the massive rise in daily trading volumes of Hong Kong market. And it's going to be here probably forever. It's unlikely going to be reversed. But with that water mixed, completed integration, we also set out 5 years ago to really change the fish, because we used to have a lot of the old traditional, fish in the pond. They're nice and they're good, they're fat and they're big, but they're not as dynamic, they're not as innovative, they're not really as transformative in this new environment. When our pond needs to really become an ocean and need to really connect it upstream with the Yangtze rivers and the Pearl rivers, and we need a new kind of fish. And that's why we set out this massive reform of our listing regime. And 2 years ago, we finally are able to allow them to come. Not only the new companies who can come here, but also the companies who have been in other places can return home and be able to do another listing. And that really start to really also, again, after the couple of years of initial seasoning, we start to see a massive arrival. And I think we probably are not seeing the end of it at all. So I think between the two massive liquidity change and underlying change, we are able to bring complete new life into this market.
Yes.
And it's going to be here to stay.
And in the few minutes we have left, we should touch upon derivatives as well, being a central theme of this conference. You've long tried to broaden things beyond just the listing market. And, I touched upon some of the acquisitions in my introduction to you. The most recent example, I guess, would be the MSCI Equity Index Futures Product Suite. I think you launched 33 contracts in July and August. So tell me where derivatives and products like that fit into your broader strategy.
Yes, when I talked about transforming the underlying earlier, and I was not only talking about transforming the underlying, the cash equity underlying, the listing, and equally important is transforming the derivative underlying, of our market. And that really had three key elements. One is to transform our existing ecosystem of derivatives. So, our structured product, for example, we're the largest listed structured product in the world. And in the last 5 years, volume increased by 50%. So we did a lot of things to stimulate and changing the regime, and making it more competitive, more efficient. So that is the first element, transforming the existing product ecosystem. The second is really now with Connect money coming here all the time, we want to create a new underlying that is not only representative of Hong Kong and China, but more importantly, Asia Pacific. So that global fund who are coming here to invest in Hong Kong underlying or even going into connecting to China, why are they parking here? They're able to have exposure to a broader Asia Pacific index and the Pacific exposure. So I think, we start working really hard to make sure that we are able to be competitive when MSCI Asia Index futures contract were supposed to be renewed every 10 years. So we are zero onto it and focused on it. And so we succeeded in having that really tremendously influential leading index futures contracts to be, as a group, moved to Hong Kong. And that will help redefine and innovate and reiterate, that will help redefine and energize our market. The third element, which we talked about it before, I think you'll be hearing more, as into the future, is really make sure that China underlying, derivatives are also able to find a new home in Hong Kong. And I'm very confident. We actually made an announcement, earlier with the MSCI, China futures. We signed the contract to launch MSCI future contracts in Hong Kong, and we're working with the Chinese and domestic security regulators. Hopefully, we'll have something to report at some point soon.
Sounds good. Well, our allotted time has flown by. It's been a great pleasure to speak with you, Charles. Thank you so much for being with us today.
It's great. I wish I could see everybody and like every other year, but this is now one of those years. But very much thank you for attending this great conference, and good luck to all of you. Thank you.
Thank you.